Analyzing the overall trend of the market provides the candlestick investor with a characteristic of what an overall trend is doing. For example, we can see how as the market moves up, there's profit taking, moves up, there's profit taking, moves up, profit taking. We can see very clearly when the profit taking is over based upon our normal analysis of stochastics being in the oversold area and seeing a potential reversal signal such as the inverted hammer right on the 50-day moving average. And when it came back up above the T-line, our simple analysis just remains that the uptrend remains in progress as long as the trading stays above the T-line. Even on a shorter term basis, it can be seen that the trend is in progress, but on any given day, there's profit taking, price move, profit taking, price move, profit taking, price move. So this makes very short-term day trading very difficult without any substantial or sustained move for a numerous time frame or numerous days in a row. But the fact that it remains above the T-line tells us that the overall trend has not changed. The graphics of candlestick charts, though, reveal much more information than just merely the numeric interpretation of what the market's doing or line charts. For example, today the NASDAQ was off 14 points. It was down, supposedly. But to the candlestick investor that saw that it opened lower and closed up here, provided very valuable information in the sense that when it opened, there was still buying going on. Even though the market closed lower on the day, the uptrend was in progress. There hadn't been any dissipation of buying or any evidence of sellers taking control. It was still a buying uptrend. Knowing that the overall market is heading up allows a candlestick investor to be much more aggressive. For example, after the earnings on Twilio, the earnings were decent, but they apparently didn't like it. But after the knee-jerk reaction, the buying came back in, and you could see the little J-hook double doji type pattern that told us that Twilio was staying above the T-line, and now we can make a much better assessment of where it's likely to move. Probably coming back up to test the high and or having a continued uptrend like the initial uptrend versus or before the profit taking. And the individual signals allow us to identify which uptrending stocks still have the best prospects for continuing higher. We'd recommended BTAI a while ago during this uptrend, but note what it did today. On Friday or yesterday, it closed and did an evening star signal potential that if it had opened lower today, it was time to close out the position. Now, the reason we'd give it one more day is look at the nature of the trend. For the past few months, the T-line has been a major factor. So you give it one more day with the analysis, very simple for human nature. It needed to open positive and trade positive to stay in it. The fact that we saw a kicker signal, meaning it opened here and closed here, and then gapped up at the previous day's open or higher and went the opposite direction, provided a very strong indication that that kicker signal was indicating there's going to still be a lot more upside. And to have maybe a few positions short in the portfolio, just as a hedge, there's still powerful sell signals like the bearish kicker signal. SPWR opened here, closed here. Today it opened here and went the opposite direction, indicating a very strong selling force. So the candlestick signals applied to a trend allows investors to make a much more accurate assessment of where they should be placing their funds and what trades are starting to lose a little bit of steam and have a place to move those funds to another high probability trade. That'll be it. We'll see you in the chat rooms.